What a magical time to be an investor in high yield funds. Roundhill has some new weekly tickers that are just coming online and they are leveraged. This means a couple different things. Let's get into it. This is Mike, the tactical stock scalper. All right, baby. I love me some leverage funds. And I want to talk about kind of the pros and cons of leveraged funds and what this means for these new Roundhill tickers. So first off, they are 1.2, okay, versus 1.0 of what a normal ticker, normal stock would be. So if a ticker went up 100%, these would go up 120%. And on the flip side, if they went down 100%, your Roundhill fund will go down 120%, right? So you need to understand the risks associated with a leverage fund. Now, this could be a degenerate's dream. It could be a nightmare, depending upon who you are. If yield max funds are risky to you right now as they stand, these are definitely not for you, okay? Because if you get nervous or anxious if the market or your ticker, whatever, goes down for a day, 2, 3, a week, months, whatever, and this makes you nervous, right now with the yield max fund, you don't want to see what a leverage fund will do to you, okay? So I do want to give you some caution here. These are not for everybody. Where I think these shine initially, just by looking at them, is in trading. And I think this opens up a whole different avenue for yield max funds that we're not seeing right now. We'll have to see how they work out. Because we know they're capped with covered calls, yield max funds aren't really good for trading at all, or curve at all, because curve spreads are so wide, there's no AUM. You can't really trade, not as effectively as yield max funds. You can't trade curve as effective as yield max. But these offer some serious potential growth that you don't get with, say, curve and yield max. I say potential growth because we need to see how they work. Now, let me just throw this out as an example, okay? I trade SPY. I almost exclusively swing trade leverage funds. I do that over options, and there's several reasons. One, you can get much more movement from a leverage fund than you can off a single ticker. And what I mean by that is like SPY. I trade SPY-U. If you're in my Discord or in my membership group, you know a lot of the swing trades I alert that I get in are from SPY-U, which is a leverage fund of SPY. So, for instance, for the past 365 days, SPY is up roughly a little over 30%, okay? SPY-U was up like 98%. So you can see, how much more you can gain off something that's going in your direction. And there's all kinds of leverage funds out there available already for almost every major ticker out there, right? There are all kinds. Now, SPY-U is a 4x leverage, which means you're hoping to catch 4 times the amount of the underlying. That doesn't necessarily happen over a longer period of time because with leverage funds, they do degrade over time. Much like with options degrade with theta decay, right? We have some kind of decay in our leverage funds. Okay, so it's not as extreme as, say, theta decay, depending upon what option you get and this, that, and the other. But there's still some decay, which is typically not as much as options. And you get some really great movement to the upside or in your direction, because you could short with leverage funds as well. So in your direction, you can get much more movement than if you held the underlying. But generally not as much as options, right? So you have it kind of balances out between the two for me and the way I trade. It's a perfect medium. Well, these are opening up such a new way of using high yield funds that we haven't seen yet before. So you can catch some really good movement off these leveraged Roundhill funds to the upside that you wouldn't catch in, say, Curve or Yield Max for that matter. So I think for guys that swing trade, they're high, and there's a lot that do. I mean, there's YouTubers that even talk about, they're in and out over a course of week, months, whatever. These might be your best option for that because you can get some real share price appreciation in addition to the weekly dividend. They're also paying on Tuesdays. So how's that, right? You can get paid from these things on a Tuesday if you're holding them. Get paid from your other funds on Fridays. I mean, it's great. I think it's wonderful. Now, just think about this, okay? And why they're not for everyone. If you are really heavily margined, okay, let's just say, and you go in on these Roundhill leverage funds and the market starts dropping, which inevitably it will. It's going to at some point. When? Week, month, year, years, who knows, right? But it will eventually. And you're leveraged with your own leverage with margin at 120% to the downside, right? 1.2% to the downside, rather. That is going to compound day after day. So that stock price depreciation is really going to kick you in the gut. So you got to have a strong stomach with leverage funds and have a high belief that you're in the right fund for the right reason because the underlying is something that you have strong conviction in. Now, for me, time will tell if these are really going to be a solid long-term investment. I need to watch them through time and history, but I got no problem trying to check these out after. I'll give them like a month or so and see what they pay, how they move before I dip my toe in the water. And if I see an opportunity to swing trade some of them, I think I'm going to definitely try it. Now, me personally, I have no problem holding certain leverage funds long term. TQQQ is a great one that I don't have a problem with at all. Yes, it degrades over time, but I know for a fact over time the NASDAQ goes up, SPY goes up, things like that, right? So if we know that, and I know that, then I don't care if it's down for a week, month, year, doesn't matter. I'll just average in slow at levels. And then the hope is, and which has been come true for me, if you've seen any of my trades, that we average down at levels, then eventually the market goes back up in our favor, and we really catch that nice share price appreciation. So I do think there's a place, particularly if you like to trade yield max or high yield funds. Long term, I don't know yet, and I don't think we will know, obviously, for quite some time. Do I think yield max is safer? As of right now, yeah. I mean, until we see them in action and how they move, definitely. They don't possess as much risk as these Roundhill funds coming out. So please be cautioned, be aware, do your due diligence, and make sure these funds coming out are right for you before you jump into them. And make sure you know what your level of risk is before you get into it, because these could really hurt you if we go through a down cycle. Hope you enjoyed it. This is Mike, Tactical Stock Scalper, out.